Welcome to The Explainer. Today we're diving headfirst into the revolutionary and, let's be honest, pretty controversial world of blockchain and digital assets. We're going to unpack the tech that promised to change everything, the spectacular crash that shook the financial world, and what it all means for the future of money.
Let's just start with this prediction from 2018, because it really sets the stage. We're not just talking about a new kind of stock or bond here. The idea was that this could be as big as the internet itself, a total game changer for how we think about trust and value.
So here is our roadmap. We'll kick things off with the big promise of blockchain. Then we'll see where it fits in the history of money. After that, we'll get into the two rival ecosystems that popped up, CeFi and DeFi. Then, of course, we have to talk about the massive 2022 collapse. And we'll wrap up by looking at what's coming next.
Okay, so let's get right into it. What exactly is this groundbreaking technology that's underneath everything from Bitcoin to NFTs?
You know, at its heart, the concept is actually pretty simple. Just imagine a digital notebook that's been copied and shared across thousands of computers. Every transaction is a new line in that notebook. And once a line is written, it's sealed with some seriously strong cryptography and chained to the line before it. It's almost impossible to fake or change. And the best part? There's no single boss, no bank, no government in charge.
And this is where it gets really cool. All these features work together. The linked blocks, that gives you a perfect, traceable history of everything that's ever happened. The fact that it's public, well, that means anyone, and I mean anyone, can look at it and verify the information. Total transparency. And that consensus part means everyone has to agree on the state of the notebook, which is what stops fraud. Put it all together, and you can suddenly have two strangers who don't trust each other at all send value back and forth securely.
But to really get why something like Bitcoin was so revolutionary, we have to take a step back and ask a bigger question. What even is money? Seriously, this isn't just about code. It's about the evolution of one of the most important ideas in human history.
So here's the deal. For anything to really count as money, it has to do these three jobs. It needs to hold its value, so $1 today is worth about $1 tomorrow. It has to be a yardstick we all agree on to price things. And of course, you have to be able to actually buy stuff with it. A lot of the whole debate around crypto really just comes down to how well it does or doesn't do each of these three things.
And this timeline just goes to show you, Bitcoin didn't just appear out of nowhere in 2008. Not at all. It was the end result of decades of work. You had academics talking about this stuff back in the 80s. Then you had the cypherpunks in the 90s, who were obsessed with using cryptography to protect privacy online. The dream of a private, secure digital cash system was alive and well long before Satoshi Nakamoto finally cracked the code.
Okay, so as this new technology started to mature, two totally different philosophies on how to use it emerged. And this really created a new frontier in finance. It's where the pure, decentralized dream of the early days kind of crashed into the reality of building things that normal people could actually use. And this slide right here really gets to the heart of that split. On one side, you have centralized finance, or CeFi. It looks a lot like your bank. You trust a company, like a big exchange, to hold your money and handle your trades. It's way easier for sure, but you're giving up control. On the other side, you've got decentralized finance, or DeFi. This is the pure vision. You're not trusting a company, you're trusting the code. You always control your own assets, but man, it has a much steeper learning curve and a whole different set of risks. And when you look at the market, it's pretty clear who the big players are. You've got Bitcoin, the original, which has mostly settled into its role as a kind of digital gold. And right behind it, you have Ethereum, which is something totally different. It's more like a global computer that lets people build this whole world of DeFi on top of it. Everything else is kind of jockeying for position behind those two giants.
And this right here is where our story takes a dramatic turn. We're talking about the bust of 2022. This was not just a market correction. This was a brutal, full-scale stress test that exposed huge risks and became a powerful, real-world lesson in financial contagion.
So the first domino to fall was something called the Terra Protocol. The whole thing was built around this algorithmic stablecoin that was supposed to stay pegged to $1. But unlike other stablecoins that are backed by actual cash in a bank, this one was held up by a super complicated algorithm. The idea was it would automatically create and destroy another token to keep the price stable. Well, in May 2022, that delicate machine flew apart.
And the result was just catastrophic. $50 billion of value. Gone. Wiped out. Not over a few months, but in just a matter of days. It was a complete implosion, and it sent a massive shockwave through the entire industry.
And that shockwave triggered an absolute cascade of failures. The damage wasn't contained, it spread like wildfire. You had all these big CeFi companies, hedge funds, lenders, exchanges that were all secretly connected. They had lent each other billions of dollars and made huge, risky bets, so when one fell, it pulled the next one down with it. One after another, they all just froze up and went bankrupt.
And this is the really critical takeaway from all that chaos. At the end of the day, this wasn't really a failure of blockchain technology itself. This was a failure of centralized companies, run by people who were making incredibly risky bets with other people's money and hiding how much trouble they were in. It was a classic old-school story of human greed and terrible risk management. Now, for anyone studying finance, this crisis is just a perfect, real-world example of behavioral portfolio theory in action. The theory says we tend to put our investments into mental buckets based on our goals. And what happened here is that a ton of investors put crypto into the lottery ticket bucket, the one for pure, massive upside. They got so focused on that dream of getting rich quick that they completely ignored the catastrophic downside risk. So after all that carnage, let's zoom back out. What did we learn from the boom and the bust? And more importantly, where in the world does digital finance go from here?
Well, the aftermath made a few things crystal clear. The CeFi model, the one that looks like a bank, is vulnerable to the same old human mistakes. But what's really fascinating is that many of the core DeFi protocols, the ones that are just code, they kept running perfectly through all the chaos. But that doesn't mean DeFi is risk-free. Terra showed us that the design of the code itself can be flawed. And the one thing that's absolutely certain now, a huge wave of regulation is coming for the entire space.
And you know, that push for control isn't just about taming crypto. While all this chaos was unfolding, governments around the world were quietly speeding up their own plans for a totally new kind of digital money, the Central Bank Digital Currency, or CBDC.
So what we're looking at now is this incredible three-way battle for the future of money. You've got the crypto idealists pushing for private money free from government control. Then you have the US government, which sees a digital dollar as a way to keep its power on the world stage. And then you have other major countries who see their own CBDCs as a chance to finally challenge the US dollar. The winner of this fight is going to shape the world economy for a long, long time.
And that leaves us with one last really big question. Sure, these government digital currencies promise to be super efficient, but they also bring up some profound issues of privacy and control. If the government issues your money directly, could they just turn off your access to it? Could they monitor every single thing you buy? As we step into this new world, the biggest question isn't about the tech. It's about the kind of society we want to live in and what balance we're willing to strike between convenience, control, and our own freedom.